good afternoon. You're watching ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is continuing to be in the red. A bit of a profit booking is what we saw after solid momentum that was there for the last couple of trading sessions. So, slip below the mark of 19,500 on an intraday basis. Right now, trading at the middle of the range, of course, towards the lower end of that. Having said that, it's banking that continues to be the pain point. There's no respite at all in the banking names. Even at lower levels, there's not a big leap in terms of fresh buying that's happening, and that's really the spot of bother right now. The mid-cap's actually faring a lot better. If I'm looking at the Nifty Next 50 index as well, that's up almost 0.3%. The mid-cap index almost at the flat line now, just going into the green perhaps. And the Next 50 is the other one that you're watching out for. And Select Mid-Cap 2 is trading in the green. So the the larger names in the mid-cap category, if we can call it that, are the ones which are doing quite well for themselves. What's also doing well is the entire defensive pack. So Pharma and FMCG, they have managed to buck the trend. Both those sectors are in the green. Separately, news flow coming in on rupee as well as commodity as well. Rupee has weakened to a 10-month low, so we are watching out for that. On the other hand, you have crude, which is near a 10-month high. So lots of data points to track, but not a fresh trigger per se for the market.
Not at all. Metals, though, that was the one gaining sector from last week. That's seeing a significant cool off today. So everything from Tata Steel, which is the top drag on the index, it's down over 2%. Hindalco is down, Hindustan Copper, SAIL. And mind you, these are some of the biggest losers from within the Nifty as well as the F&O segment. That can be said about even a PFC, AB Capital. These are stocks which are seeing some profit taking. And like Anisha mentioned, it's largely banks which is also weighing heavy on the indexes. Let's talk about a couple of newsmakers as well. And there's clearly Geo Financials that's going to be deleted from the NSE as of close today, and one is expecting selling of about 10.5 to 10.8 odd crore shares, and I think that's going to transpire maybe in the last half an hour of trade this afternoon. So that's one stock, although there was a, earlier in the day today, a block deal as well, or multiple block deals. 1.7% lower is where that stock is right now in trade. Global sugar, Anisha just flagged off commodities, so it's not just crude, but even agri-commodities are seeing a flare up, and sugar prices are at an 11-year high. That's bringing the entire sector into a tizzy. It's 400 plus levels now for Balrampur Chini, Dhampur Sugar holding up by about almost 7%, and EID Parry as well holding out 7.5% as we speak. Not just that, couple of buzzing stocks, Voltas, which had a Motilal Oswal upgrade as well. Petronet LNG has been a big buzzer from the word go. And then Torrent Pharma, wherein Nomura has hiked their target price to now 21.99. That is another stock which is holding out well. Of course, in Petronet LNG, UBS says that there is growing electricity demand, which is going to aid LNG imports. So that's one of the fallbacks or ancillaries from the power sector heightened demand that one is seeing. Petronet LNG stands to be a gainer, 6.25% higher there. But for the index, it continues to be status quo, no-go, just hovering around 19,600 on the futures. But let's welcome on board Kunal and Nuresh, find out what they're making of the trading day today. Kunal, how long are we going to just drag our feet around this range on the Nifty?
Very difficult question, Aisha, to start off with. But, I think the markets have moved on beyond looking at the index trends as such. We are already into a phase. We've already going into a phase over the last 2 months, and specifically from that 20th of July top for the index at 90,900 odd levels, where the markets have moved into two different directions. The mid caps and small caps have just gone through a different kind of a frenzy or an uptrend, and the large caps have underperformed significantly. So I think it's just a matter of the markets, still moving into that kind of an inertia of a trend. We're still trading into above the key support levels of 90,300 mark for the index, and that is, I believe, a strong case enough for the index for index traders to still be on the long side of the trade. So would maintain that long stance, the bullish stance on the index, and hoping that this, if we don't break below that 90,300 levels or correct below those levels, we could also probably try and come back towards the previous size of 9,900 and higher.
Okay, so that's the take coming in on Nifty. But Nuresh, what's your view on Bank Nifty? Because as we were just highlighting, that continues to be the weak link. But the only stock that deserves mention from the banking space is HDFC Bank, because while the rest of the pack is very much in the red, HDFC Bank is somehow holding up.
So every day, what we are seeing in the banking space is we are not seeing We are not seeing a shift in terms of momentum across the board. So yesterday HDFC Bank was down 1% and we had a flat line across the rest of the banking names. Today HDFC Bank is up and we have a 1% downtick on an ICICI Bank. So 28% roughly is the weight of HDFC Bank on the Bank Nifty. So once it starts sustaining about 1600, 1620, that would be the first indication of a reversal. But out here, we are at the lower end of the range for ICICI Bank as well. So overall, the viewers, we are looking at a reversal sign on Bank Nifty as such. Momentum shift happens once we cross 45,000. So for now, I would expect 44,200, 44,300 to hold for the Bank Nifty, and above 45,000 is where it becomes a momentum shift.
That's a take coming in on HDFC Bank, while ICICI Bank is underperforming. It's HDFC Bank which is sitting at the highest point of the trading session. Hence, we are talking about that. But Pramod Apte from InCred Equities also joins us now. Pramod, your view on HDFC Bank and the banking sector, if you have any topics there?
Yeah. So we are broadly overweight on the sector as a banking, as the credit growth has picked up and is aided by the inflation momentum. So our preferred pick is, as you talked about, HDFC Bank, where we feel the overhang of the merger is behind and the branch expansion, along with the housing loan portfolio coming on their hand, where the sector tailwinds are definitely positive for them to outperform that segment augurs well at this level, and early break even for new branches can be a positive trigger for HDFC Bank.
Pramod, given the market construct right now, wherein the mid and small cap indexes continue to, eke out fresh highs on a daily basis almost, and the Nifty is standing absolutely quiet, where are your positive biases? Where do you think one can still invest in and gather good returns?
Sorry, is that for me?
Yes, Pramod, for you.
Yeah. So we are still constructive on the broader market. However, having said that, the outperformance of the mid and small cap has been substantial versus the Nifty 50 since May. So interestingly, if we are to look at our coverage universe of 200 stocks, 180 to 200 stocks, we have seen our analysts downgrading almost around 16 stocks in last 2 months, which is basically around 8% of the stocks we have downgraded to either hold or reduce. So, of which a large part is either because of valuation concerns or because of the business momentum not getting or getting more than factored into the valuation. So we are seeing almost if I have to look at the downgrades versus upgrades in our portfolio, almost around 3:1 in favor of downgrades versus the upgrades. So we are becoming more and more selective in mid caps. We are only taking relative valuation calls, as the valuation call taking is becoming risky considering the amount of fund flow. And I would say in terms of investment themes again coming through, we are more positive on the housing and housing related themes within the mid cap space. And our top 3 picks, if I had to look at within the mid caps, will be more in for example, BEL, Ashok Leyland, Mahindra Finance and Thermax is where our comfort is on the mid cap.
To talk about some of the flashes running for you at the bottom of the screen, and very important story which is brewing perhaps, that's that Tata Consumer product is in talk to buy at least 51% of the popular Indian snack food maker Haldirams. So that's the news flow coming in. They're looking at a valuation of $10 billion. And if you look at it, they're in talks not only with Tata Consumers, probably Bain Capital is something that might be also be in talks to pick up stake in Haldiram. So that's the story that we're talking about. Look at the reaction on Tata Consumers. That's seen a very sharp spike. Of course, overall, it still continues to be up almost 2%. But nonetheless, the street seems to be quite excited if and when this acquisition does fructify. Let me take a technical view on the stock as well. Kunal, your take, Tata Consumer?
Well, I found this stock to be very attractive. I think in the last 2 months or so, the stock has been just going through a sideways range. 840, I think, broadly has been a very good support for Tata Consumers. And the 2 rallies the stock has shown previously has led into a 50-point, 60-point jump up into the stock price. So, closer to this 840 mark, I found this stock to be very attractive. And my sense is that whenever that breakout happens, we could be looking at least an 80 to 90 point up move for the stock from that 840 level. So would be very bullish on Tata Consumers, irrespective of the news flow, but purely based on the charts. I think that 840 support should hold up pretty well. We could be looking at 920 as a more medium-term target for Tata Consumer.
Look at this one closely, Tata Consumers. Pramod, the question is for you.
So, no, we don't officially cover
Sure.
the Tata Consumer, so would like to avoid that.
Okay, just going through the agency report, and while they are saying that Tata Group's consumer unit, that's Tata Consumer, is in talks to buy at least a 51% majority stake in Haldirams. But having said that, they're not quite comfortable with the $10 billion valuation, and they are seeming it to be a little too high. Also, if successfully concluded, the deal would see them directly compete, remember, with the likes of a Pepsi and billionaire Mukesh Ambani's Reliance Retail. The size of the entity would become that large. And, like the wire agencies are reporting that Haldirams, it seems, is also in talks with private equity firms, including Bain Capital, about a 10% stake sale. But what Tata Consumer, according to the reports, mind you, this is not information that we're picking up. This is purely agency-based and source-based info. That what Tatas are interested in is a 51% majority stake in Haldirams. Let's see where the story actually takes shape. But Pramod, if I could just, get your perspective in right now, wherein you are seeing urban consumption trends pick up, and that's been the case for almost 2 quarters now, at the cost of extreme weakness when it comes to the rural end of the market. Where within FMCG do your preferences lie?
So we are still to get a clear signal in terms of the sustained recovery. As you rightly said, it's still a K-type of K-shaped recovery where either it's urban outperforming the rural, and considering the way the rainfalls have been relatively scanty in August, it looks still the rural recovery is still a misnomer to follow through. And I think that set of customers is still struggling with to cope up with the either higher inflation or with the higher interest rates. So we are more of a neutral and more selective in case of the overall FMCG space at this juncture. We recently downgraded even HUL to more like a hold, considering the relatively the risk-reward position there in terms of specific sector.
Okay, so that's the whole story as far as consumption and what's happening with Tata Consumers as well. But just taking stock of what else is happening in the market, it's sugar stocks, which are seeing quite a bit of rally. Sri Renuka Sugars, EID Parry, the other names, and the soft commodities as a whole pack that are seeing quite a bit of run-up. Pramod, is this a segment that you track actively, sugar stocks?
Yeah, we cover the agris and also in that way the sugar. We have an anti-consensus thought process there. We recently downgraded the sector, where basically we feel that the excitement around the international or the global sugar prices benefiting the companies may not be realizable in a year where there are a series of elections, as the government policies may not be favorable for them, either to realize them in terms of export realization or in terms of the sugar prices moving up, I think, drastically in the short term. So hence we have more, I would say, underweight on the sugar at this juncture.
Underweight sugar, so that's the sort of anti-consensus view that seems to be coming out right now. But Pramod, before I slip into a very short break, I just wanted your market view as a whole, because I think you guys have one of the most bullish targets on the Nifty, almost 21,103 kind of target is what you have. What's the timeline and which are the sectors you think will lead the rally?
So this is more like a 12-month target price, which is we try to arrive at more in the basis of the 1 year forward. So basically, if you look at we are much more constructive on and selective on the Nifty 50 as compared to mid-cap. And our broader thought process, the reason to be on the positive side is the economic activity seems to be ultimately getting realized in terms of earnings beat and the earnings upgrade. So this is coming after nearly a 1 year of pause or consolidation, and which is a positive, constructive trend. So as we climb the wall of worries on the large caps, we clearly feel that these targets will be realized, especially in the interest rate sensitive segments around festival or post festival, the recovery can come through. So we are, in terms of these sectors which can easily push towards that, is we are constructive on autos, we are constructive on the aluminium, we are constructive on more infra, capex and defense related sectors, where our comfort lies for these targets to be realized.
That's the take coming in on the index and where one sees it headed. Softer by about 50 odd points or so, or 60 points now. Petronet LNG, Syngene, Voltas and Page Industries, they continue to be your high flyers. Not the case with metals and select private banking names as well. We'll take a very quick break. When we come back, continue our discussion with our experts. Back with closing trades right here on ET Now. Dip down a little bit further and then you're seeing that little bit of a pickup come by. Let's see whether we can make it to the green. 19,540 is where the index is positioned. Once again, better a day for the broader end of the market. Oil and gas, textile, media, pharmaceuticals, FMCG. These are spaces which are actually contributing to today's move. You're seeing Petronet LNG. We've talked about that stock holding up a good 6% in trade from the word go, has been a big winner, and it continues to hold high today as well. Of course, Pramod, if I could just get your opinion on not just Petronet LNG, but power and its ancillaries as well. Of course, UBS has the view that growing electricity demand is also going to aid LNG imports, and that's why they're bullish on Petronet LNG. But your entire view on power and the ancillary spaces as well, given the heightened power demand that one has seen?
See, I would say we are more constructive on the gas distribution companies, where clearly the softer input prices versus the new policy, which gives a midterm, I would say, view in terms of profitability coming through on the distribution. That's where our comfort lies to play around per se in the overall gas distribution as compared to versus Petronet, which will also be a part of the beneficiary from this trend.
What's your reading on the charts on Petronet LNG, given the spurt in the stock today?
Is that for me, Aisha?
Yes, Kunal, for you.
Okay. So, I strongly believe that Petronet is a stock which has been absolutely more sideways. You look at the last 7 years of charts, 2016 onwards, and it's almost been into a range of some 60 points. I think 210, 215 has been a support, and then I think close to 275 approximately has been a major resistance. Now, when such kind of stocks, they generally require some sort of an event or news flow surrounding, them to try and get into a breakout zone. I don't expect that this breakout, which has happened for Petronet in the last couple of days, could probably sustain. My sense is that the stock should get into a correction. So I think it's actually a very good time for traders who've been buying the stock to, maybe book out profits over here for a stock like Petronet, because if the erstwhile behavior repeats itself for the stock price, we may actually expect the stock to correct and say come back towards that 220 to 25 mark.
Okay, that's the take coming in on Petronet LNG. Kunal's reading on the charts is that actually book profits. Naresh, another set of stocks which is holding up very smartly, Voltas, which also has seen a brokerage upgrade, and then Page Industries has made a move after a while, up 3.5% right now. What's up? What are the charts indicating? Some follow through here?
So Voltas is something which has a stiff resistance around the 920 to 940 mark. So it's a tough risk reward at current prices, although the price volume action is very promising. But I would give it a pass as of now. Page Industry is interesting because that's a move which is happening across the sector. So we are seeing a move in Lux as well as dollar. The stock is about to cross the recent highs of 41,500 levels. So that would be a short-term breakout, could take it to 43,500. So looks promising. And it made a double bottom around 36,500 even on the bad quarterly results. It made a low around that area that got retested in July, and so a strong base is done, and now crossing 40,500 would open up a trade up till 43,500 to start.
Sugar, that's definitely one space which is really flying high today. Supply concerns from India, Thailand, Brazil. You've got sugar prices which have surged to an 11-year high right now. Also adding to that is the rainfall deficit, which is going to impact production, and we've seen the impact of El Nino being felt over there already. Pramod, what's the outlook on some of these agri-commodities and whether sugar is a space which will continue to be sweet for an investment?
As I indicated earlier, we are anti-consensus on sugar, right? You are right on the prices. They seems to be moving up, especially on the international side, and there's a hope that it can be realized as profits to the Indian companies. But government is very sensitive on these prices, especially both on the inflation point of view and also from the election point of view. So hence that getting ultimately realized as the earnings for these companies looks challenging for us. And hence We downgraded it a couple of months back, and we continue to hold that view for at least for some quarters, considering these challenges, which feel are undermined considering the type of run-up which we have seen these companies, and hence we feel the risk reward is unfavorable at this juncture.
My question was actually directed to Naresh. Naresh, wanted to get your perspective in on the charts, and would you concur with Pramod's view here? Does it seem like the risk reward is not in favor of sugar, and should one be taking partial profits at least?
So sugars, we are seeing a different move. The small caps have moved up over the last 3 sessions, but the largest name, which is Balrampur, is yet to break out. So that is where there is still, say the risk reward is good. 420, 425 has been the high for the last 12 months for the stock. If that breaks out, which it seems like to be happening in the near term, given that the stock is in derivative band, that's the reason it is pausing out here. So the view is Balrampur Chini looks the most interesting in terms of risk reward. The smaller names have already moved up, but the trend is positive. We are seeing this across the board. So it's not just a Balrampur. We are seeing something like a Dalmia Bharat go up, or a Ugar Sugar, or a Sakti Sugar. So whenever the trend plays out, it can continue and surprise on the upside. But after a 15% move in the last 2 sessions in most small cap names, a difficult risk reward, but Balrampur Chini looks very interesting at current prices.
Chini, that's a stock that you like. But let's take a detour and go across to Asesha to get a sense as to which are the stocks that brokerages are liking at this point of time and the kind of reactions we are seeing on the stock prices. Asesha.
Well, yes, first up, let's talk about Torrent Pharma. Yes, as you mentioned, Nomura has come out with a note. They're maintaining their buy stance, but they've gone ahead and hiked their target price from 1838, now stands at 2,199. Remember, Cipla Promoter Group has been looking to sell its stake, and reports suggest that Torrent Pharma is leading the race to acquire that stake in Cipla. So on the back of that, this note has come in where they say that Torrent potential acquisition of Cipla will be a big deal, and it makes strategic sense for Torrent Pharma to acquire the stake. Acquisition will require a mix of debt and equity infusion, equity dilution rather, and they expect Torrent promoters to retain about 48 to 63% stakes. On the back of this note that has come in, Torrent Pharma is gaining in trade today. Apart from this, Petronet LNG, the stock in fact is gaining nearly 5 to 7% on the back of an UBS note where they say that growing electricity demand is expected to boost LNG imports from here on. Utilization of coal-based power plant is already stretched, and gas-based generation has been stepped up to meet growing demand. On the back of this note that has come in on Petronet LNG, this counter is buzzing in trade today. Lastly, on Voltas, Motilal Oswal is maintaining its buy stance with a target price of 1,000, where they say that the company could enjoy market share gains. They expect RAC segment's market share to improve to about 21-22% by FY 24-25. EMPS segment, meanwhile, is expected to recover on the back of strong order book that the company has, and long-term positives are visible. This is what Motilal Oswal has said, despite near-term challenges that the company is facing. So for now, they're maintaining their buy stance. 1,000 is the target that they've given, and hence this counter is also gaining in trade today.
Okay, thanks Asesha for that, but let's just focus back on the story that we were highlighting earlier, that Tata Consumer is in talks to buy a majority stake, that's 51% stake in Haldiram. The stock was reacting to this. We have reached out to both the companies, Tata Consumer as well as Haldiram's. Tata Consumers has said that they do not want to comment on market speculation. However, we did get a word from Mr. Kamal Agarwal, the Executive Director at Haldiram Foods International Limited as well from Nagpur, and he said that they're not aware of any such development and they are denying of any talks as far as sale of business is concerned. So that's the latest. But let's also welcome on board Abneesh. He's joining us from Nuvama to talk to us about if and when this deal does fructify, what could it mean for the company? Abneesh Roy is with us. Abneesh, hi. These are the initial details and the story that we have, that Tata Consumers is looking at buying 51% stake in Haldiram's. Tata Consumers has been talking about how they want to expand their food business. But do you think this could be a good fit for Tata Consumers?
Yes, so definitely Tata Consumer wants to transform its portfolio, and if you see even organically and inorganically, they have been doing multiple initiatives last 3 years since Sunil D'Souza has taken over as MD. So earlier we saw Soulful being acquired in the breakfast cereals and the kind of scale up they have done, and they have done in their existing brands also multiple launches. So they are very clear that because now distribution also has been doubled. They want to be a very different portfolio 3 years, 5 years down the line. Now, coming to a specific question on how this thing will pan out. So one, of course, is if you see any deal, unless and until it is announced, it can always be very difficult to say whether it will happen or not. And we earlier saw even in Bisleri, it had come in the newspapers and everywhere that deal is happening, and then the deal did not happen. So I will say that yes, definitely Haldirams is India's largest snacks player by mile, and it will be a very large acquisition. So if I see currently our forecast for FY24, Tata Consumer revenue is around 15,000 crores. So Haldirams will be a very large size. So we don't have numbers for last year because it's unlisted for Haldirams, but my sense is it's around 10,000 crores number. So it's a very large acquisition. It will be a great acquisition. We have seen already Bikaji, which got listed, doing so well in that space. So it's a exciting space, but ultimately it also boils down to what will be the deal contours, because that also will matter in terms of EPS accretion also. But I will say that currently these are early days, because if you see the statement also that Tata Consumer is saying that the $10 billion valuation is rich. So we need to see whether the deal actually happens, what are the contours, etc. But clearly it's a great brand. Haldirams is a great brand, India's largest snacks brand for sure. And it will be a great acquisition, but deal contours are also equally important to see.
You know, and that's exactly the point, Abneesh. I mean, these are just news agency reports which do indicate that Tata Consumer is saying that 10 billion valuation is too high. But given that Haldirams as well, in the previous times or in past times, has wanted to IPO, wanted to understand what exactly is the valuation that Haldirams is quoting, or rather is quoting at, and what's then really the fair value of a 51% stake in the business?
No, they are unlisted, so we don't have clarity on their growth plans and how the different metrics are. So I will not comment on the valuation bit, but definitely it's obviously an exciting space. We have seen Bikaji do so well. Their growth numbers are very decent. Post-IPO, Bikaji stock has done well. There's good interest also. Of course, Haldirams is a much larger player than Bikaji. And of course, in FMCG, larger player, clearly the interest level is also higher from larger global investors also. Plus, definitely in terms of margins and overall profile, larger company will generally be superior to a smaller company. So Haldirams will have very premium valuation, but I'm not able to comment on a specific number given it's an unlisted company.
Completely. But, you know, just Abneesh, to the point that you were earlier making, you're saying that on the balance sheet size that Tata Consumer currently has, they will not be able to pull through such an expensive acquisition?
No, I think that is not the case. It's Tata Consumer is from one of the India's largest conglomerates, and we have seen generally Tata as a group under Mr. Chandra as the chairman, and he is very clear that Tata Consumer with Tata kind of brand name, 3.9 million outlets distribution and scaling up further. Why should it be restricted to just salt and tea and a few more breakfast cereals and water, etc.? It has to be much more deeper and wider in FMCG. So next 3-5 years, I would expect Tata to be very aggressive in terms of the inorganic and organic both. But definitely, I would say that that's not the case, that they can finance or not finance. Ultimately, Street will see on EPS accretion what happens. So that's the important number. For that, we'll need full details of the P&L of Haldirams, and then we need to see what is the stock, what is the deal contours, and then we need to see how they will finance it, mix of debt and equity. So I would say that yes, they can definitely acquire. I don't see that as the issue. The issue is what will be the EPS accretion in any these kind of large valuation initially first 1 or 2 years. I would say that it will be EPS dilutive in most such large acquisition. So I think that is the bigger question rather than the ability of Tata Consumer to go for such a deal. I don't think that is the issue.
Funding is not the issue, and overall it could be a good fit for Tata Consumers as well, given the brand value is so high, the presence is so high, it's even higher than BKG. But as even Abneesh pointed out, deals like these are a bit tricky. We have seen there has been a lot of speculation around Bisleri deal, around that Ching's sauces as well. That deal too is in the pipeline apparently. So we'll wait by and see how this materializes. Thank you, Abneesh, for joining us with that, with your initial take of how this deal would, what really it will mean for Tata Consumer. That stock continues to gain ground. So we had seen an initial uptick of around 2% when that story broke out. Since then, the street has actually digested, the details in terms of what Haldiram could bring to the table, because it's very distinct and different from what Tata Consumer does right now. It's largely into coffee, tea, salt kind of spaces, and this comes more as a packaged food kind of vertical. But nonetheless, the brand value and the kind of complementary products that it could add to the portfolio is good. And Abneesh is pointing out that even funding and financing will not be a problem, given there's a backing of the Tata brand coming in there. So those are the initial thoughts. But of course, Tata Consumers has said that they do not want to comment on market speculation. And the initial comment that we have got from Haldiram International Foods Limited suggests that they are not aware of any such talks which are there. But let's go across to Vinny as well. She's the one who tracks the space very, very closely. Vinny, your initial thoughts, your sense, and what are you looking at as far as this deal is concerned?
Absolutely. As of now, what we are understanding, and this is just reports that are suggesting that Tata Consumer Product is looking to buy that 51% stake in Haldiram. But, what we get commentaries and understanding from Haldiram when he spoke to Haldiram Foods management, they did say that they are not looking at it something as of now as well. And just let's look at it in terms of the revenue also, right? How is that shaping up for Haldiram as well? When you look at it and this is how what we're picking up is in terms from the DRHP and RHP of Bikaji Foods when they had listed as well. So on the back of that, we are keeping an eye out on Haldiram's. The revenues, what they did as of now in FY22 is the last figure that we have, and that is at around a growth of 23%. So that is a factor that we are watching out for. The gross margins were at around 31% as well. But the revenues were around the 10,000 crore mark as well. So valuations, are going to be something expensive, and it will be very interesting to see, because Tata Consumers, as of now, the cash on the books was around 3,500 crore. So if it's an expensive valuation, how would they be actually looking to pay for it? That's a concern that one is watching out for as well. When you look at it in terms of the net sales for Haldiram's, Delhi plus Nagpur, both the companies of Haldiram's, that was at around 7,481 crores. So approximately nearing that 10,000 crore mark as well. Let's keep an eye out on that. Comparing to the valuations of Bikaji, also they made sales of 1,600 crore. So it's much higher in terms of valuations and sales as well compared to Bikaji as well. And will be interesting to see if this actually is going to be panning out. But as of now, what we got the word from Haldiram Food International is that they are not looking at anything in terms of a stake sale of 51% stake to Tata Consumer. So let's keep an eye out on that.
Surely, as is the stock and the market, 3.5% is the kind of spike up that you've seen on Tata Consumer, even though we've got an on-record denial coming in from Haldiram's Nagpur saying that they're not in conversation with Tata Consumer for any stake sale. Still spiking up 874 on Tata Consumer as we speak. But let me quickly take it across to Kunal Naresh, get in some closing ideas as well. Kunal, quite a few buzzing stocks out there. Idea, Indus Tower, what's on your radar?
Well, yeah, I think, yes, in the last few minutes, Idea and Indus Tower, they've managed to spike. And I think both these stocks are looking very attractive to be on the charts. So specifically, I think Indus Tower at 185, I think looks set now to break past about the 200 level. So could be a very interesting play. But in terms of closing trades, even the pathology stocks today have started to look very attractive. So Laurus Labs is something which I would pick up in terms of closing trades. Looks very attractive about that 400 levels, and would expect the stock to at least claw back towards 440, 450 mark, possibly in the next couple of weeks or so.
Okay, so those are the top recommendations from Kunal and his view on certain stocks which are buzzing around like Indus and Vodafone. But Naresh, what are you spotting?
So looking at Reliance Industries, that's a stock which has been trying to hold on to that 2400, 2420 mark. Holding on for the last two sessions, looks like a bounce back in the making. So expecting this to go towards 2500 over the next couple of sessions.
Industries. In fact, let's take a look at the market itself. There is a big jump up which has happened there. A very, very vertical move is what we are witnessing on Nifty. It's moved into the green and it's now almost at 19,600 level. Yes, Tata Consumer would be one of the index stocks which are also moving higher, but that does not have that large a weightage at the index level to actually move it. But nonetheless, we are seeing a very strong momentum on the upside on the index. So Bharti Airtel from the entire telecom space, as is Indus Tower and Vodafone, all of these three stocks are excited. Pharma continues the up move as well. So Divi's Lab, Cipla, Titan, these are the names that we are tracking. And the Nifty Bank too has managed to pare down its losses quite a bit. At one point of time, it was down almost 300 points. It's almost half those losses. And now HDFC Bank, of course, is trading with a gain of 1%. And AU Small Finance Bank is also inching higher. Time now to slip into a very short break, but don't go anywhere. When we come back, we'll track more what's happening in the market. Welcome back. As we were highlighting, the markets are doing much better than what it was just 30 minutes ago. Look at the sharp uptick. 600 has been scaled. In fact, for the longest time, we were waiting for that level. 19,300, 400 had become the range, but finally it seems that we are breaking out, and that after quite a bit of cut from the highest point of the trading session. So fresh buying is what we are witnessing. Geo Financial Services, let's pull up that stock as well, because there was some buying pressure that was expected there. So that stock has actually moved into the green now, and again a very sharp spike. So a lot of dichotomous move happening in the market right now, but we'll keep tracking all of that. We have a latest story and exclusive coming in as far as fertilizer space is concerned. Let's go across to my colleague Prakash to try and understand what the story is, because we understand that government may increase the subsidy on some of the NBS fertilizers. Prakash, fill us in with the details.
Yes, we are learning from our sources that the government may increase subsidy amount on NBS category fertilizers, that is nutrient-based subsidy. We are given to understand that the subsidy amount may be hiked to offset high international prices, and government is considering this proposal. Sources are informing that the NPK category fertilizer prices have increased by $150 per ton in last few months, and we have seen major spike in DAP prices so far. So considering all this, Fertilizer Ministry is reviewing the situation, especially in terms of import prices and demand supply situation in the country. Sources are also informing that new rates could be announced for Rabi season, especially starts from October. We also given to understand that the government is considering this proposal to hike subsidy amount on NBS category fertilizers to support companies for higher imports in order to meet domestic demand.
Okay, that's what we're picking up from our sources on the fertilizer subsidy. Good pickup actually from for the markets. It's actually Tata Consumer, no surprises there, spiked up quite a fair bit, although there's been a denial that we've got on a record from Haldiram saying that they are not in any stake sale talks with Tata Consumer. Tata Consumer, of course, has said that, you know, they don't comment on market speculation, but the stock has spiked up still 4%. And to think of it, it was lying just about absolutely flat, pretty much mirroring what the index has done for the better part. HDFC Bank, Bharti, Apollo Hospitals, Britannia, Titan is the consumption plays which are actually taking the fore today. Mahantesh Sabarad as well joins in on the show right now. Mahantesh, hi, afternoon. Good to have you on the show. Just wanted to understand, Mahantesh, what's weighing down on the entire metals pack, you think?
Good afternoon. Thank you for having me. I think the metals pack underperformance has to be linked to the Chinese market. Essentially, China is the market that drives the global commodity markets. With a depressed kind of real estate market in China, which the government is trying to in a way revive, foretells us that probably the metal sector demand dynamics will remain quite subdued, and therefore Indian metal market or Indian metal companies being exposed to global commodity prices and price fluctuations are naturally getting affected by that.
Okay, that's the metals weakness. Kunal, what's your reading on the charts? Because up until last week, it was actually metals which was leading the rally, right?
Well, yes, Aisha. And in fact, my strong belief is that many of these metal stocks are actually looking very, very attractive. So these are high beta stocks. They would probably be one of the, I would not say the last sectors, but the sectors which tends to move in the last leg or the last phase of the strong bull market trend. But we've seen historically that whenever we've seen the metal stocks participating, the rally for many of these metal stocks takes most of the metal counters above their multi-month highs and even multi-year highs in many cases. Now, Tata Steel, Hindalco, for example, these stocks are about, I think, 10% or 15% still off on a round of basis from their previous major swing highs, which means that these stocks have a potential of at least another second leg of uptrend. So I would probably, in fact, use this phase of correction or this mild drop down or dip into these stocks as a very good classical contra buying opportunities. Hindustan Copper, Tata Steel, SAIL, these stocks looking very attractive on the charts. And as I mentioned, I would look out for at least a 10 to 15% upside further for these stocks over the very near term.
Thanks, Kunal, for that. But it's raining exclusives on ET now, and this one is an exclusive interaction that my colleague Ankur Mishra had with Axis Bank MD and CEO Amitabh Chaudhary on the sidelines of the GFF 2023, which is underway in Mumbai.
Almost every product which RBI is launching from the Innovation Hub, I think Axis Bank is one of the banks which is part of that exercise. So we have launched Kisan Credit Card, which you saw. We have launched a similar platform for MSMEs. We are launching UPI on credit. And I think you will see more and more of these products being launched by Axis because we do want to be at the forefront of this. We fully realize and appreciate that the market might not be ready. We fully realize and appreciate that in some cases, we still need some parts of the ecosystem to come together. But as I said, we are not waiting for it to happen. We want to be part of it. We want to be part of the development of this journey. And we are hoping that when they take off, which we believe they will, we will get the benefit of being at the forefront and being one of the innovators in this marketplace.
Another question which has been there in the market, you have given a release on Axis Max Life deal. You have yourself said that you are going to abide by it. But there were several reports saying that, regulator has concern. Is there anything from your side you would like to
We have just announced a deal. This newspaper or whatever the item which has appeared, I think relates to some of the discussions we had with the regulator more than a year back. There's nothing new. We have not gone to the regulator with the new application. Let it happen. Let us get us the permission. Then we can talk about it. So I think it is all speculation at this stage, and that's what I'd like to leave it at.
Okay, that's the word coming in from Amitabh Chaudhary. In the meantime, let's take stock of what banks are up to because they are the private banking names, that is. They're the ones which are the underperformers today. So IndusInd Bank is almost down 2%. Axis is down 1.6% on the futures. About 1.5% dip coming in for ICICI Bank as well. And SBI as well is languishing in trade as we speak right now, although HDFC Bank is not. It was one amongst the top movers on the index and continues to be so. About a 1% move is what you're saying on the stock right now. Nuresh, let's revisit your thoughts on the private banking names, IndusInd, HDFC Bank, ICICI Bank, and what you're reading on the charts.
So I'll start off with ICICI Bank. The stock earlier had made a top around 960, which got tested again in May, June. And we are still around that 960 plus minus 10, 20 points for the last almost 2 months. So technically, still the bias is positive till the time we hold about 940 levels. About 1000 is where it gets into momentum. Then we go at IndusInd Bank. The stock has tested 1430, 1440 for almost the 5th time in the last 2 months. If it sustains above that, that would be a breakout. Same is the case with an Axis Bank. The stock has tested that 1000 mark almost 4 or 5 times over the last 2-3 months. So if you look at it technically, once we see a follow-up price action on these 3 names, that could be a breakout. It's only HDFC Bank, which is at the lower end of the range, as well as Kotak Bank. But HDFC Bank also has a lot of supports around 1550 to 1575 mark, which is where it is holding on for the last 1 to 2 weeks. So overall, the whole space looks promising. We are just waiting for price action confirmation. Say an Axis Bank crossing 1000, IndusInd Bank crossing 1440, HDFC Bank crossing 1600, 1620 levels, ICICI crossing 980. Those would be an indication of a momentum confirmation. So the whole banking space looks interesting and on radar for a breakout.
Space looks interesting. And Mahantesh, I want your view on the banking sector as well, but I want your view on the story which my colleague Ankur has broken exclusively, and that's on the incremental CRR. Remember, it was the announcement that came in the Monetary Policy Committee meeting, and the Bank Nifty had seen quite a bit of downtick on account of that. This means that the banks had to hold initial, incremental cash, etc., on their books, which they could not use for lending. But now we understand that there was going to be a review ahead of September 8th. That review is underway, and what is possible is the fact that ICRR might continue for a few more weeks. First up, let's go to Ankur, and then I'll take the view of Mahantesh as well. Ankur.
Yes, sources say that Reserve Bank of India is going to review the situation on incremental CRR very soon. In fact, if sources are to be believed, the decision might be taken today itself and the announcement may happen maximum by tomorrow. Remember, Reserve Bank of India has imposed incremental CRR on banks, and this was a targeted tool by Reserve Bank of India because they found that liquidity situation has been in surplus, especially after 2,000 rupee notes were deposited in the system. And therefore, this targeted approach was taken by Reserve Bank of India. But you would remember then on August 21, first time there was a situation when the liquidity went into deficit. But after that, the situation improved. Many of the bankers we have spoken to have told us that they expect Reserve Bank of India to continue this incremental CRR for few more weeks, and we need to wait and see what decision actually Reserve Bank of India considers. If you see the liquidity situation, it has already been back into the surplus, but all will depend on the assessment of Reserve Bank of India on incremental CRR.
Thanks so much, Ankur, for joining us with those exclusive details. Mahantesh, your view on the story and the banking sector?
So let's go back to what the RBI had announced when they made this incremental CRR, policy decision. They had clearly mentioned it was going to be a temporary phenomenon, and it was expected by the next monetary policy meeting, which means an intervening period of 2 months. They would review it and possibly revoke that incremental CRR. My expectations are that since it's a temporary measure, it's not a classical monetary tool that RBI needs to exercise for a long duration. And I said, therefore, suspect that this will be revoked. If not in the coming week, it definitely will get revoked by the time we are into the next monetary policy meet. So having said that, I think that could sound a bit of positive news for most of the banks. Remember that now we are going to enter the post-monsoon credit season, wherein you will find, normally speaking, the deposit growth actually accelerate further ahead of the credit growth. That being the case, we will probably see the incremental CRR getting revoked.
Okay, that's that on incremental CRR. In the meantime, let's also get you a buzz on what's the dealing room chatter, the fact that we've made it back to that 19,600 print. So sitting at the day's highs, Sharad is here with all the dealing room chatter. Sharad, what's the stock that dealing rooms are talking about this afternoon?
Well, yes, in focus we are having home first finance, and what we are hearing from dealers is there's buying seen in the counters on the HNI segment. The volumes also of the stock, if you see, is almost 3 times its 20-day average. And also the buzz is that the company itself has been meeting a lot of conferences, and they have been meeting a lot of marquee investors as well. Importantly, there is an important buzz coming across the real estate space as well, as the festive season is expected to pick up, and the luxury players as well as the domestic affordable housing players, both these segments are expecting a strong move going up. And because of that, there is a buying scene in these affordable housing companies as well. Now, Jefferies also came out with its report, and they've stated that the housing companies, finance companies have actually not run up, and the valuations are still attractive as compared to the retail NBFCs. And also importantly, the potential revival coming in for the interest subsidy for the affordable housing finance augurs well for the industry.
Okay, Sharad, we leave it at that. That's Home First Finance on the radars this afternoon. Important to mark what the global cues as well are looking like, because both from the US handover, or for that matter how Asia was this afternoon, or rather this morning, or for that matter how European stocks have actually kick-started trade, it's actually a weak trajectory all along. FTSE is now down 0.7%, similar as the price action for a CAC, for FTSE MIB, which is down 150 points, or for that matter 0.6% cut coming in for the stock 600, or the DAX, which is also mildly soft with regards to how oil prices have been moving. But you're not really facing the heat for our markets, which have actually recovered ground and made it back to that 19,600 mark. Kunal, you think 19,600 is sustainable?
Well, yeah, I broadly think 19,600 is sustainable. In fact, over the last 2 days, actually, I've been giving buy calls on the index, and my view has been on the bullish side. So even after intraday dip of that 40-50 points on the index, didn't change the view. In fact, the best part about the day today is large cap stocks slowly and steadily making a comeback. For example, HDFC Bank, as you speak, I think is almost at a 10-day or a 12-day swing high. Now that's a very, very interesting phenomena shaping up because today the volumes for HDFC Bank are one of the best volumes, at least on the future side, in the last 4 or 5 days. This shows that there's activity which is perking up back again into the large cap stocks. And whenever large cap stocks they tend to participate or get back into the line of into breakout zones, we've seen historically that the Nifty sustains the up move. So I strongly believe that with large cap stocks participating slowly and steadily, at least those signs being visible, I believe that the index should see more upside, would maintain those targets of 19,900 on the index, possibly in the next few days.
Okay, that's the take coming in on index. Seems like gains are here to stay. But let's take in some BTST trades as well. Naresh, on your list?
So 2 large caps, buy on Reliance Industries, stop loss at 2400, target price of 2480. Second, a buy on ICICI Bank, back at the support area, stop loss at 948, target price of 970.
And Kunal, what about your BTST ideas?
So CESC is the first stock which I would recommend as a buy. I had given this yesterday as well. Maintain the targets of 104 on the stock and stop loss at 85 would be extremely bullish on the stock over the near term. And Crompton is the other stock which is also heading towards a flat pattern breakout, trading at 308 approximately. Targets of 330, stop loss at 295.
Okay, that's the technical strategies coming in, some BTST ideas as well. Mantesh, in the days to come, what's that one news point or sector news that you're going to track?
So I think what we're going to look at is the oil and gas sector, primarily because the government is now introducing the so-called subsidy element. If that comes true, probably that could be a little negative news for the oil and gas sector ahead. And the second bit of news I would look at with the kind of complete recovery happening in the US economy, probably the IT sector will start announcing newer deal wins, and the sector outlook can look potentially better.
So that's a take coming in. Thank you, gentlemen, for joining us. Naresh, as well as Kunal and Mantesh for your take on the markets. But overall, it's ending as a good day for the bulls as well. We are ending above the mark of 19,600 at the index itself. Of course, your biggest gainer on the index is Tata Consumers, which is going home with a gain of a solid 4%. Then comes the pharma stocks, because that was the top sectoral gainer in the trading session as well for most parts. It was Torrent Pharma. After that, Nomura target price upgrade came in. Lupin, of course, was doing well. Divi's Labs, Cipla, Abbott India. These were some of your top gainers. From the FMCG pack, apart from Tata Consumers, the entire Alcobev industry was seeing quite a bit of traction. So case in point being Radico, Ketan, McDowell, even United Spirits, all of these stocks were doing well. What was on the back foot was clearly the PSU banking space. Look at a PNB, a Union Bank, a Bank of Maharashtra. All of these stocks saw some profit booking, and ditto can be said for Realty and Metal as well, because both of those indices are going home with a cut of almost 1 to 2%. Stock-wise, of course, there was a lot of action in sugar stocks. So EID Parry, Renuka Sugar, these were the stocks which were buzzing around. And then there was some news flow on the fertilizers as well that we brought you exclusively. So on account of that, FACT, RCF, these were some of the stocks that were reacting to the news flow as well. Paper stocks were also having a field day. So JK Paper ended with a gain of around 7%, and then come the telecom stocks. So right from an Indus Tower to a Vodafone-Idea to Bharti Airtel, all of these stocks were fairly excited in the trading session. On the losing side, data patterns deserve mention with a cut of around 5 to 6%. Some public sector entities like Shipping Corporation of India, NCC, railway stocks saw quite a bit of profit booking. So Indian Railway Financial Corporation, that has surged almost 30% in the last 2 to 3 days, saw a cut of 5% today. RVNL was also down in the trading sessions, and Titagarh Wagons too saw a cut of almost 4%. So overall, traded looked like it was a good day for the bulls. Overall, advanced decline ratio was also positive, and at least after many days, we have managed to scale the level of 19,600 and close above that. Thank you so much for joining us. That's a wrap from the Closing Bell team.